Hello. Okay, for you folks at home, we just took a quiz here in class, and why don't you go ahead and show that quiz up on the screen for the folks at home. What I encourage you all to do is, let me back that out a little bit so it's on. What I encourage you folks at home to do is just to pause this, get out a piece of paper, and take the quiz just as if it were a real life quiz situation. Obviously, I can't pick it up or give you points, but see if you can do this, okay? And then you can just push play when you're done with it. Now, we're going to grade this in class. You're going to find that there's 5 total journal entries. We're going to grade them for the face-to-face people. We're going to do it 2 points each. So it's a 10-point quiz, like all quizzes, and it's an all or nothing. So if you get the numbers right but the account's wrong, they don't get any points. Or the account's title's right but the number's wrong, they don't get any points. Okay? So let's go through this real quick. Robert's company purchased merchandise from Carl, Inc. with an invoice price of $65,000 and credit terms of $215 net $45. The merchandise had cost Carl an amount of $49,000. Robert's company paid within the discount period. Assume they use a perpetual inventory system. Okay, we can do that. Let's go ahead and take a look at this. All right. Well, first of all, let's shift into the mode of buyer first. Okay. Now, who is the buyer? Roberts. Okay. So let's do the buyer journal entries. Okay. Well, when they purchase the merchandise, they debit merchandise inventory and credit accounts payable for $65,000, right? So that's worth 2 points. When they pay, do they pay within the discount period? Yes, they do. Now, they do not have to pay cash of $65,000, do they? They only have to pay cash of 98% of $65,000, right? Which, if I do it on my handy-dandy little calculator, I get $63,700. So they pay out cash of $63,700. The entire accounts payable is decreased because it's satisfied. And then where does that extra $1,300 go? A credit to merchandise inventory. So this is worth 2 points. This is worth 2 points. Okay? All right. Now, any questions on that? Let's do the journal entries for the seller. Now, who is the seller in this situation? What's the name of the company? Carl. Okay, now when they sell the merchandise, they debit accounts receivable and credit sales for $65,000, right? Now they also have a second journal entry they have to make that day, right? And that is to debit cost of goods sold and credit merchandise inventory for how much? 49? So those 2 journal entries are made on the date of sale, correct? Now, they were paid within the discount period, so they do not receive $65,000, do they? How much do they receive? $63,700? Is that right? Yeah. The entire accounts receivable is decreased. And then where does that $1,300 go? Sales discounts. Sales discounts, okay? So that's worth 2 points, that's worth 2 points, that's worth 2 points, okay? So at the very top of it, put how many they got right, like plus 10 if they got it perfect, okay? And then why don't you hand it back to hand it back to whoever did it. Okay? All right, how did you folks at home, during all this commotion, how did you folks at home do on this? I hope you did well. You have a question, Anna?
Yeah.
Yeah, what is it? That's fine.
This just, I can't tell what he wrote right there. What number does that say?
I mean, you got it.
Or Jessica. It looks like an M.
I just can't read his handwriting right there.
I don't think that's right.
Okay.
Let me see. It's not 63,700.
Yeah, I just couldn't read it right there.
Yeah, it's not 6,300. Okay. All right. Do you know why I do? You know why I write these quizzes for you?
Because you love us.
Because I love you guys and I want what's best for you. Okay? Someday you'll thank me. But more specifically, the reason I do this is because a lot of times students don't realize that they don't understand something until they're in a situation where they receive points. Does that make sense? They do their homework, they get it wrong, but then they see the answers and they go, okay, I got it now. And they really genuinely think they understand it. But then they take a quiz and they bomb it. And they go, oh, maybe I don't understand it. Okay? Well, I would rather that realization happen, that you maybe don't know it. I'd rather that happen on a quiz than on the test. You see what I'm saying? So that's why I do these quizzes, because I love you guys. All right? Okay. So why don't you take a look at what you got? Why don't you hand them to your left? All right? Hope you folks at home did this. I love you guys too. It's just it's a far away love. Okay? So do these quizzes when we do them. See how you do. Grade yourself and assess whether you understand this material. Because we have this lecture, then we have another lecture, and then it's test time. You with me? We have this lecture, one more lecture, and then test over chapters 5 and 6. Cool? All right? Okay, let's shift. Oh, any questions, comments, anything? Okay, for you folks at home, you guys know the dates when your tests are due, and make sure you don't wait till the last minute. Okay? I've already had several people give me the email from face-to-facers. They send me an email, a frantic email, the day of the test, and say, oh, something came up and I can't take it today, and don't put it off to the last day, or that's going to have to be the test you drop. Okay? Or every day late that you take the test for you media people, for every day you take the test late, it's 15 points off, regardless of the reason. Okay? All right, let's go ahead and go to Chapter 6 homework. Last class period, I had concluded the discussion over the weighted average and the specific identification methods, right? And I had asked you to finish up new technique and to do exercise 6.3. Was that correct? Okay, I want to show you something real quick before we go over that homework. Take a look back at the SpongeBob answers, okay? Take a look back at the SpongeBob answers, okay? All right, see that? Remember when we did this with SpongeBob? Remember how much fun we had? Okay, I want to show you something here. I don't know if anybody noticed this. But if I add up, let me back that up a little bit. Okay, the top line was for FIFO, the bottom line was for LIFO. If I add 103 plus 81, what's the number I get? 184, you're right. If I add up 117 plus 67, what's the number I get? 184. Okay, that's not by coincidence. And if I ever ask a question in this manner, you can use this to check your answers. Okay? Now, if you're curious why this works, it's because if we go back to that original equation that I taught you, beginning inventory plus purchases equals merchandise available for sale. And then that either has to become ending inventory or cost of goods sold, right? Remember that? Because we could say merchandise available for sale minus ending inventory equals cost of goods sold, or you could say minus cost of goods sold equals ending inventory. Okay? So, when we look at these numbers, that 184 in this specific example, that actually equals the merchandise available for sale in this situation, the beginning inventory plus the purchases. Okay? And it either has to become cost of goods sold or ending inventory. So the sum of these two answers is going to equal the same number. Okay? Now that being said, take a look real quick, get your calculators out, and look at your answers on new technique. And add those two numbers up. And see if they equal the same sum for each of your methods. FIFO, LIFO, and weighted average. Okay? Do that real quick. You folks at home can do that too. Okay, while they're finishing that up, I'm going to show the answers. Then I'll show you how we compute them. Okay, what do those numbers add up if you got them correct? What do those numbers equal if you add those up? Somebody tell me.
16,215.
Okay. 250. Is that true? I got it.
Oh, yeah.
Okay. Okay. I think what they add up to, if you add any of those, is 16,212.50. Did anybody else get that? Okay. Now you didn't use that to check your homework because I hadn't taught it to you yet. But looking at it now, did the sum of each method equal that number for y'all? Okay? It's a great way to test if you got something wrong. Okay? All right? So use that if you would like. Now, it does not work. It doesn't work if I ask the question in a manner like I did on BBs, and I'll show that answer real quick. Remember when we did BBs? It doesn't work like that. But it does work if I ask for the ending inventory at the end of the period and the cost of goods sold for that period. Okay? All right. Well, once again, there are the answers for new technique. Take a look at those. All right, and I will show you the detail of how we do this. It's a little challenging because the size of the screen, but let me do that. Okay. Okay. Now this is the whole answer right here, but that's pretty hard for you to read. So I'm actually going to concentrate on the rightmost columns. Okay. So take a look at that. Can you see that in back, Kara? So that is how I got the FIFO for new technique. You can see the cost of goods sold down there at $10,700 and the inventory balance of 5512.50. Okay. All right. Any questions on that? Somebody's phone just rang? Don't we have a Browning rule for that? Okay. All right. Let's take a look at LIFO. There's the answers for LIFO. All right, again, this is for new technique. Again, I'm just showing you the two rightmost columns. Okay. Any questions on that? If not, let's look at the weighted average for new technique. Okay, let's see if I can zoom in a little bit more on that. Okay. All right, y'all get that? If you folks at home, for whatever reason, can't see the answers to these, shoot me an email, and I'll figure out how to get those answers to you. Maybe I'll just email them to you, okay? But hopefully you're getting the answers right, so you already have the answers, okay? How'd you guys do on that one? Did anybody get all those right? Okay. Some yes, some no. If you didn't get them right, do you see where you made your mistake? You see where you made your mistake? Okay. All right. Any questions on new technique? If not, we also did exercise 6.3. Is that correct? Okay, so let's go ahead and do that one. And this gave you some information, and it wanted you to figure out the info for each method, correct? Let's turn to exercise 6.3 real quick. All right, exercise 6.3 on page 258. They use a perpetual inventory system. They give you some information, and they want you to use each method. Okay? Now, let's go ahead and do the specific ID method first. Okay? The specific ID method first. Now, you might have used your inventory sheets on these. You can on specific ID, but this is the way that they did it. They actually figured out what the ending inventory is worth, and then they recognized from the other answers that the sum of ending inventory plus cost of goods sold should equal 2820. And they got their cost of goods sold at 1505. All right? So that is how they did specific ID. And again, in specific identification method, they have to tell you exactly which ones were either sold or which ones were not sold, and then you back into the other one. Okay? So that's really the only example I think we did of specific identification. But are there any questions on that? Any questions on specific ID? Some of you are still writing, so I'll leave that up there for another minute or so. Okay. All right, any questions on specific ID? So what does ending inventory plus cost of goods sold equal if we add those together? 2820, is that correct? 2,820, is that correct? Okay. Now let's take a look at the answer for weighted average. Now, I wish they wouldn't have done this, but they did. They had a rounding situation here, didn't they? Did y'all figure that out, that they had a rounding situation? Okay, we really wish they wouldn't have done that. Wish they'd have picked numbers that didn't involve rounding. But I always say round to 2 decimal places. Now, if your answers are different by $1 or 2, you're fine, okay? You're fine, and you won't miss any points. Now, what is the total for weighted average? What's the total of the cost of goods sold plus the inventory? Once again, it's $2,820, isn't it? You see that? So you could use that to check your answer if you would like. We only need to figure out the weighted average cost right before we make a sale. Okay? So that's the answer to the weighted average perpetual, or weighted average on exercise 6.3. Any questions on that? Did you guys get that? Marlon.
So at the very end, after you make your very last sale and you still have inventory left, say you have two different, and you make another sale. I mean, not another sale, but another purchase.
Yeah.
Would you do weighted average again?
Yes.
Okay.
Yeah. You're going to do weighted average before every sale. Now, let's take a look at this situation. Let's just go down layer by layer. Okay, right here they had one, this just had one layer, right? So the average cost was pretty easy, wasn't it? Okay? But see, here they purchased another layer, right? They purchased these 220 at 6, so now they have to figure out the average cost. Okay, it's different than the last time, right? Okay? And when they sell those, they say that that's what they sold it at. Okay, they took it to 3 decimal places. You could take it to just 2. Now, they purchase another layer, and there's not another sale, but if there were another sale after this, that's the average cost they would use. They recompute this right before they make every sale. Now, this might seem really tough to do, but can you see with computers how this would not be that cumbersome? Okay? Them computers are smart, aren't they? Okay? So that they could just, this would just happen as far as a kind of a computer situation. But you're right, Marlon, it would be recomputed. Yes, Kara, did you have a question?
For the average, do you add up the 60 and 20 and divide that, or how did they get the 6.214?
Okay, good question. The way they got that, I'm going to zoom in there a little bit, okay? How they got this was they took their total inventory cost of 1740, and how many units are in ending inventory? 280. And that's how they got the 6.214. Does that make sense? Okay. Okay, good questions. Any other questions on the weighted average? Again, the answers add up to 2820. Now let's take a look at the FIFO method. Okay? Let's take a look at FIFO method. Back that up a little bit. The answers are 1560 and 1260. Once again, that adds up to 2820. So we can use that to check our answer. Take a look at that detail, see if you got it right. Okay. Did you guys get FIFO right? Okay. Once again, though, on the test, folks, if you have time, do these problems twice, because you could make one little multiplication error, one little fat finger calculator error, and miss all your points. Okay? So you want to make sure that you get, that you recheck them, that you use these mechanisms to check your answers if it's asked in that manner. But you don't want to miss points just from some little calculator error. I always hate it when students miss points and I realized that that student left about 10 minutes before they even needed to. And I was like, gosh, if they'd have stayed here and just worked through this again, they might have caught those errors. Okay? All right, lastly, let's take a look at LIFO for this situation. And that's at the very bottom. Okay, so leave that up there if you would, cameras. Okay, the LIFO. Okay, the cost of goods sold is $1,500. The inventory balance is $1,320. Those add up to $2,820, don't they? Correct? Good way to check your answer. Okay? All right. Any questions on that? Okay, let me ask you all. How many of you got all those right, all 4 methods right? Okay? How many people got 3 of the 4 right? Okay? All right. Okay, well, have any of you done enough of these where you're starting to realize that there's kind of there's sometimes shortcuts? Does anybody realize that, especially like with FIFO? Okay. Here's my philosophy, and this will sound very Kung Fu Panda-ish. There are some shortcuts to doing this, but I don't teach the shortcuts, because when you're ready for the shortcut will appear. Okay? All right? But if you do enough of these, you start to see some patterns, especially in FIFO. Okay? Now, we're not going to really work through any more of these in class. Okay? But you are going to do on your Connect assignment, you'll do another one of these. Okay? All right? And I'll tell you folks after class when that Connect assignment is due. For you folks at home, always check what I have sent you via email to know when those Connect assignments are due, or what's posted on Angel if I've done it that way. But you do have a Chapter 6 Connect assignment where you'll do another one of these. Okay. The other thing I want to urge you all to do is, how many of you have been using those practice tests and looking at your practice test answers that I have posted on Angel? Have you? Yep. Okay, those are really good. I've got some really good problems on there in the practice test for chapters 5 and 6 that I would encourage you to do. The practice test is out there, and the practice test answers are out there, right? So I have another inventory one you can practice if you want a little bit more experience doing this. Okay? You think I'm going to ask this on the test? I am. And you will have inventory sheets if you want to use those. Okay? If you need those. Some people don't use them. All right. Any questions? I think that's all the homework I signed. Is that correct? Okay, good. Okay, let's go to, let's take a look at, man, we haven't been to the slides on this chapter for a long time, have we? But let's go over there to the slides. Let me bring this up real quick. And you can see on those slides, they walk you through a complete set of FIFO, LIFO, don't they? Now, I didn't go over those in class, but if you want to see more examples of FIFO and LIFO and how it's calculated, you can certainly use that in class. I like to do it the way we did it as far as the handout. Okay? Now, let's take a look at, oh, we're not there yet. I'll tell you when we're there. A lot of slides. Okay, take a look at this slide right here. It's pretty far along in your slides. What this is they have done a little income statement that would be prepared for each one of the methods if it were used. So they did an income statement if the specific ID method were used. They did an income statement for if their FIFO were used. They did income statement if LIFO was used. And then they did an income statement for the weighted average method. Okay? And then down here, let me go ahead and use my pen. They separately listed what the inventory would be on the balance sheet, the ending inventory, at the end of August 31st. Of course, we know inventory is not on the income statement, right? You know that by now. But, so what they're doing is saying, hey, look, the method of inventory costing that you choose is going to be a pretty important decision, right? It's going to, because look, the cost of goods sold is different for each one of those methods. The net income is different for each one of those methods. The balance sheet inventory is different for each one of those methods. So whichever method we decide to use, it's going to be an important decision in regards to our income statement and our balance sheet, isn't it? Right? Now, let me ask you a question real quick. Over time, generally speaking, do prices rise or do prices fall? Generally speaking, prices rise over time. So generally speaking, there is inflation, correct? You pay more for milk than you did 10 years ago, a lot more than we paid 20 years ago. You pay more for a movie ticket now versus 10, 15 years ago, okay? Generally speaking, do you pay more for college than when you would have 10 years ago? Yes, okay? Generally speaking, prices rise over time. Now, looking back at this example I had on the screen, this, if you look back at the slides before, prices indeed rose here as well, okay? So let me go ahead and just write that. You wouldn't be able to know that unless you looked at the slides before, or unless I told you like I'm doing now. So prices have risen, okay? Now, that being said, keep this up on the screen, please, and tell me why one might choose different methods. If prices rise over time, which is generally the case, why might somebody choose the LIFO method?
They'll get the most profit.
No, they get the least profit with LIFO. Look at that. Look at the net income under LIFO. It's only $609. That's the least amount of net income when prices rise. LIFO gives you the lowest income because cost of goods sold is higher because you're using those higher priced items. They go straight to cost of goods sold. So why might somebody use LIFO when prices rise? Look at that income tax expense line. Who has the lowest income tax expense? Oh. Who's got lowest income tax expense when prices rise? LIFO. Do you guys like to pay taxes? Companies don't like to pay taxes either. So now do you see why some companies might choose to use LIFO? When prices are rising or in an inflationary environment, LIFO results in the lowest income tax paid. Okay, look back at that again. Which one results in the highest income tax paid? FIFO. Wouldn't that make sense? And wouldn't it make sense that for weighted average is in the middle of FIFO and LIFO? Because it kind of smooths out the changes. You with me? Does that make sense, folks? Now, we talked about why people might choose these methods. Now, remember one thing that I said. The method that you choose does not have to reflect what reality is, okay? A grocery store could choose to use LIFO, even if their product didn't move in a LIFO manner, okay? But the advantages of some of these methods, looking at this slide, the weighted average, as I said, kind of smooths out price changes, okay? It kind of smooths things out. Now, the FIFO method, the first in, first out, last in, still here, means that the ending inventory more mirrors the current replacement cost because the last in, the latest purchases are still here in ending inventory. They're those most recent purchases. Does that make sense? Sometimes you got to kind of think through these. The last in, first out method, the last in, first out, that means the latest purchases are out the door with cost of goods sold. Thus, cost of goods sold is matched. Let me say that a little differently. Some people say that there's a better match with cost of goods sold and revenues on the LIFO method because the cost of goods sold is the most recent purchases. But we also know that when prices go up, last in, first out gives the lowest income tax expense. Now, what if prices have gone down? Which do you think would give the lowest income tax expense? FIFO, okay? If prices go up, LIFO results in the lowest income tax expense. If prices are going down over time for some reason, then FIFO would. Follow that? You can read in your book about that as well. Now, to further complicate things, you can actually use one method for books and a different method for your taxes. Now that seems illegal, doesn't it? But you can choose one method to keep track of your books and for your financial statements and a different method for your taxes. You can do that if you want. Most companies don't, but you can if you want to. The only thing that they say is if you use LIFO for tax purposes, then you also have to use it for your financial statements. Okay? For most companies and most industries, prices rise over time. People would probably wish they could use LIFO for tax and have the lowest net income and the lowest income tax expense, and FIFO for their books and report a high net income, make the people who look at those financial statements happy. But if you use LIFO for tax, then you have to use LIFO for your books or for the financial statements. Any other combination you can use. You with me? Now, my experience is that most companies use just one method for both. They don't want the hassle. Okay? Now, sometimes people say, well, it seems like what you should do is if prices are going up, you should use LIFO, and if prices go down, you should switch over to FIFO. Well, I like that you're thinking that because it means you understand it. But there's something called the consistency principle. And that requires a company to use the same method from one period to the next. Okay? Generally accepted accounting principles and the powers that be, they don't like you to try to fool the readers. Okay? They want financial statements from this year to be comparable to the financial statements of the previous year, comparable to even the financial statements of the previous year before that. So they want you to pick a method and stick with it. They want you to be consistent, and that's what the consistency principle states. Now, does that mean you can never switch? No, it does not mean you can never switch, but it means you better not switch a lot. And sometimes, if you switch, you may be required to restate your financial statements from the previous year or previous years, which nobody likes to do. Okay? So you can't just switch methods depending on the way prices are moving. Okay? All right. Any questions? Any questions on that? Okay, let's talk about what I want you all to do for homework. Okay? What I want you to do for homework, let me check my notes real quick. Okay, I want you to do a little reading. I want you to read pages, you should read the whole chapter. Oh, thank you very much. You can't see what I'm doing. Why don't you read from page 236 to page, I want you to read about lower of cost or market. I want you to read about what happens if you understate or overstate ending inventory. And I want you to read about the inventory turnover ratio. So go ahead and read from page 236 to page 242. Okay? And then what I want you to do for homework is I want you to try, or not try, I want you to do Quick Study 6.9. Okay? And then I want you to do Quick Study 6.12. Okay? And then I want you to do exercise 6.10. All right? Okay? So that's what I want you all to do. So we only have one more class period, the next class period, and then we're going to have the test, okay? So you all can all start studying for that, okay? Cool? All right, guys, we'll see you later. Hey, I'm early today.